what I do is I will just summarize it and talk a little bit off the cuff on three main things. So I'm going to talk about what we believe have worked. I'm going to talk about what we believe has not worked. And then I'll talk about opportunities and what the plans are for the future. So those are the three things that I'm going to touch on. So I think the first thing that we believe has worked in our markets is in terms of new products. Things like ETFs, REITs, CFDs. These are terms that were not there in the market a few years ago, and they are now common themes in the market. And also in terms of listings as well, especially on the Zimbabwe Stock Exchange, ETFs and REITs is where most of our new listing has come from. So I think in terms of new products, I think it's something that we are proud of, and it's something that we have got a lot of support both from our regulator, the Securities and Exchange Commission, and as well from government as well. So I think that's one thing that we are proud of. And also the new product that we have launched, CFDs, contract for differences. Why we like contract for differences is that there's a market that we did not believe that we had captured, which is the youth, especially in the informal sector. They like the CFDs, and coming up with CFDs, we're hoping that we can capture this segment of the market. Then in terms of the Victoria Falls Stock Exchange, we are proud where we are in terms of its growth. We are proud in terms of new listings on the Victoria Falls Stock Exchange, proud of in terms of capital raise. So we really believe that listings like Caledonia, Caro, would not have happened if there was no Victoria Falls Stock Exchange. And also what we like about Victoria Falls Stock Exchange is that it allows us to do new products into the future. I'll talk about it, but a lot of that comes because of the Victoria Falls Stock Exchange. And also the government is doing quite a lot of work in terms of the International Financial Center in Victoria Falls. There's legislation that is being done, and the Victoria Falls Stock Exchange is going to be part of that International Financial Center, and it will make it even more attractive, especially in terms of the movement of funds in and out. So we're quite excited in terms of what we can do with the Victoria Falls Stock Exchange. Then in terms of lobbying, we've got two associations that started. There's the REIT Association and there's the Debt Market Association. This is early days, but what we like is that we are grouping the whole capital markets into several groups of interest, and they should be able to lobby and come up with new ideas to grow the capital markets. So this lobby associations is something that we are quite happy to see happen. Then in terms of what we believe has not worked, I think which is something that all of us are worried about. I think the first one, I think, is in terms of restrictive taxes, in terms of vesting period, in terms of 4% withholding tax. And what it has done is it has made the markets very unattractive. And we have seen that in terms of drops in volume, in drops of value onto our markets. I think at the moment we are doing maybe 80 trades or so a day. We had gone up quite a lot, and we actually started looking at 1,000 trades a day. And when your market is not liquid, it's actually a very bad sign. Liquidity is very important to a market. It does a lot of things. It helps in terms of valuation. So it's difficult to have good valuation of your equities if your liquidity is low. And also what it does, that it makes it unattractive for people to come in. One of the things why capital exchanges are attractive is that people know that they can come in and out. And also it makes it unattractive for people to come and raise capital. So therefore you tend to get fewer listings coming in. So it's something that we're really worried about in terms of getting our liquidity up. There are things that we are doing in terms of getting this done. One of the things that we are doing, and it's not just us, our regulator is doing quite a good job as well, is in terms of lobbying government to remove the restrictions that are on the capital markets. Touch wood, we believe something will happen soon. So I think if that happens, I think that will help very much in terms of getting liquidity back onto our market. Then the other thing that also is not helping us as well is the continued suspension of Old Mutual and PPC. Old Mutual and PPC used to be very attractive counters onto our market. And we know that there are people who trusted us with their money and invested onto these two equities, and at the moment they are unable to realize their value, and it has affected pension funds, it has affected retirees. So it's something that we are working very hard to get something done. It's something that is very, on a personal note, quite frustrating, because sometimes you believe you're winning, then you realize you're not. So we keep on working behind the scenes to get something done. So I think it's something that we know has not worked. Then the other thing as well that has not worked is the absence of a debt market onto our market. So if you look at other African countries, where if you look at their market cap, they look more stronger than we are, and it's largely because of the debt market, especially the government debt market. So look at Malawi, look at Ghana, look at Botswana. What makes a big chunk of their market is the debt market, and especially government debt market. And we are working very hard behind the scenes to get government to understand that it makes sense to raise money on the capital markets. And there is I think in SADC there is a general agreement that government should raise money through the capital markets, but it hasn't happened yet. So that's one of the big things why, when you look at our ratios in terms of market cap versus GDP, is lower than other countries. It's largely because of the debt market. And this also goes to the private sector as well. The private sector hasn't really come to our market to raise money. I think anymore at a point, we believe some of it has to do with the lack of investment banking in Zimbabwe, because you expect investment bankers to come in and play a large part of bringing some of this into the market. So I think it's something that has not worked. The other thing that hasn't worked as well is in terms of financial information. So if you look at our financials, especially on companies listed on ZSE, the numbers don't make sense. Hyperinflated numbers are something that the market doesn't really use, and you are sitting there and say, then how do people make a decision to invest on the market if they don't have the financial information to do this? I mean, it's nothing to do with us. I mean, circumstances beyond our control, but it's something that really affects us as a market, in that we are unable to provide information that is important for investors to make a decision. And we are particularly worried about this year with the change from the ZWO to ZiG. We don't know how the auditors are going to do it in terms of consolidation of financials. For example, if you had a December year end, the first 4 or so months were in ZWO, the remainder is in ZiG. How is this going to be consolidated? Does it mean that financials are going to be qualified again? It's something that we're worried about, because if financials are qualified, it means they stop making sense again. So it's something that we believe is not working on our capital markets. So I think in terms of, on a more positive note, in terms of the opportunities that we are seeing, so when you look at the exchange, it depends on what you believe our competitor is. So one of the things that we believe our competitor is, especially with the younger people, is markets such as the crypto market. And if you look at the crypto market, for example, it's instant settlement. You buy something, you get it straight away. And when you sell, you get your money straight away. And if you look at our exchange at the moment, the settlement is T+3. So you buy, you get your securities after 3 days. And if you sell, you get your money after 3 days. We believe that is something that we need to work on. So we are working on it simultaneously. So the first part that we're working on is day trading. So we have the technology to do day trading. And what we are doing at the moment is talk to the market on how we can introduce day trading. And I think the third part about day trading is something that we used to do as a market. I think when we do, it's ironic actually that when we When we moved to be more electronic, that's when we lost the day trading. But when we were manual, we had day trading where you had 2 sessions. So you could buy in the morning session and sell in the afternoon session. And it's something that you can't do at the moment. You have to wait 3 days. So it's something that we want to work on. Then also working on the settlement cycle as well to move it from T+3 to T+2. And on this, we believe that it's important that we follow the rest of the world. So if you look at America, America is moving to T+1 now. China is on T+0. Rwanda is on T+2. So we are behind. I know in Southern Africa, everyone is still on T+3. But if you look at the rest of the world, people have moved down quite a bit to T+2 to T+1. And actually, New York Stock Exchange is actually saying that they want to move to instantaneous 24-hour cycle. So it's something that we need to work on as a market and make it attractive, not just to the current investors, but especially to the young people who are used to instantaneous settlement. Then the other thing that we're working on that we believe will help as well is the commodity exchange. So we are very close in terms of finalizing the minerals commodity exchange. And what it does, it allows the minerals in Zimbabwe to be traded on our capital markets. So we're going to start with a spot market, then move to a derivative market. So it's something that we're exciting, that we're bringing something that was not available at all to the capital markets to be available. And hopefully should grow our capital markets quite a bit. Then in terms of debt, the debt market, which I talked about, we are doing quite a lot of work in terms of getting government and private sector into our markets. We have an idea on how to do it. The Debt Market Association is the beginning of the work that we are doing. So I think that's important. Then I think the last one, I got a 2-minute warning. The last one is we are hopeful that we'll get new listings through Mutapa. So we had worked very hard to get state-owned enterprises to list on the market, and we always had challenges. But now we believe that now them being housed in Mutapa, it should be much easier to get them listed on our market. So I think I'll open for questions now.
All right, please, a big round of applause, Justin. Okay.